Hello everyone, welcome back to my channel. So this video marks the end of the week number 25 in this road to 100k of realized returns challenge. This has been, no pun intended, another challenging week with the markets coming down every single day except on Monday, and I say every single day because they ended up being lower than in the previous day, with the sole exception of precisely yesterday when the markets had a very strong recovery, mostly, as far as I can tell, with a mix of hopes with the new administration, the new US administration coming in for President-elect Donald Trump, as well as some encouraging data coming from the CPI, from the inflation index in the United States earlier in the week on Wednesday, when a very slight improvement on the core inflation data gave a little bit more hope to investors that the Federal Reserve might lower interest rates in the next meeting, although that possibility still remains a remote one. But nonetheless, given the situation for motor company, and starting with that, we had 6 contracts, 6 put options with a strike price of 10.5 that expire worthless because of course the strike price was not touched, or not even anything close to that. And as you can see, even though this week was a quite challenging one, we can still see that the support at around 950, 960 held strongly against the downward trend of the rest of the market, and so it held itself. And in the end, it ended up having a strong bounce from that point yesterday, to the point that currently, and the market closed at 1019. So this gives us a very good base for us to try to sell our position over the course of the following week, even though of course we can only sell 6 contracts because the other 37 are being used as a collateral for these 37 contracts. But once these expire, the collateral will be released and we'll be able to sell those again. And so they are very close, as you can see right here. They are very close to our average price, our cost basis, which is 1022. So this gives us some hope that we will be able to sell these contracts, or these stocks, these shares, in the coming days. For the time being, we'll have to wait and see what's going to happen to this contract. Of course, it would be great if we could sell those at 10.50, but in all likelihood, I don't think that's going to happen, but we'll have to wait and see. For Pfizer, we also had 4 contracts with a strike price equal to our cost basis, which is 28.50. Of course, given the fact that it expired at 26.37, the stock price, it closed the week at 26.37. The calls expired worthless, so there is nothing we can do. Again, we still are waiting for being able to collect this dividend, all right? And we'll have to wait only 1 week more, which I'm sure we are going to keep those shares until that day, and we'll have to wait to see what happens. No earnings release date yet for Pfizer, but for sure it will be in the coming weeks, that announcement coming. Now, as you can see as well, 4 is due to release its earnings on February the 5th, so it would be of the utmost convenience that we will be able to get rid of our 4,300 shares before that, in order to avoid any bad surprises that may come around. We also had 3 put contracts on the QQQ. These expire worthless because our cost basis is 536, given that it closed the week at slightly below 522. we were not able to sell these contracts. Nonetheless, the fact that it recouped some of the earlier losses, this gives us some hope that next week we will be able to sell some contracts on a daily basis, basically with 0 DT options or even 1 DT options at the price of acquisition that we have, which is 536. But so far we'll have to wait and see what happens. And yeah, the week ended up again in a profit because all of our contracts expire worthless. We kept the premiums, so there is nothing to buy because these are all call options. These were not put options. So all that remains for now is for us to input this in our scoreboard to see where we stand. So here we are, and these contracts, let's see. So these 6 contracts expired worthless. All right, as you can see right here. Let's just start by looking at this one. So this one was from Monday. This one is also from Monday. These were also all from Monday, which are already here, as you can see here, and will expire only next week. So we'll have to wait and see what happens on these. Now, for the next one, which is this one, we sold 3 contracts on the QQQ. Again, the first contract we managed to sell at 4 cents, but the other 2 ones we have to sell at 3 cents, so we'll have to settle for the average price in here. But we'll have to wait and see what happens after that. All right, so let's just put it in here. And this was on the 15th, right? And this expired yesterday because we chose to use a 3-day option. As you can see here, January 17 was the deadline, and now we have to pull up our calculator and see. So it was 4 cents for one and 3 cents for the other 2. So this gives us a grand total of 10 cents divided by 3 contracts. So this is the average premium that we received. So this is QQQ. This is a covered call with a strike price 536, 3 contracts. This is not, or this is the average, the collateral. We can use the formula here. So we're going to use like let's use two parentheses, 0.04 and plus 0.03 times 2, close the parentheses, divided by 3. And so this is the result, which matches the number we eventually got to in our calculator. All right, so let's round this down. All right, and we also managed to pay 106 and 109, so this is basically 296 in fees. So 296. This expired worthless. So as you can imagine, this is meaningless, absolutely ridiculously meaningless return that we had here. You can see expired worthless. All right, and you can also put it in here. Right, so this is even less than 1% annualized. This was just peanuts. Next one here, these are all the other contracts. So this one on 4 expired worthless, and put these contracts on Pfizer also expired worthless. So let's just close this off. So these ones for Pfizer and expired worthless, expired. So again, this is not a good return. This is a very meager one, but yeah, it's better than nothing. Let's see. Again, this is on 4 and also expired worthless, expire. This was probably, yeah, this was also 8% return, 8.66. So yeah, nothing we can do now about that. These ones are still yet to be determined because we still have that call option on the 37 contracts. So until the position is closed, we'll have to see what happens in here. And for the time being, this is it. One last thing that I want to show is our current realized returns. As you can see, this is up to date up until yesterday, Friday, January 17th. And as you can see right here, our current realized return is 26,413 euros and 22 cents across all our positions, the realized returns. So this is our currently profit. We are more than a quarter way through. Hopefully when the markets return, we'll be able to go a little bit faster, but so far this is it. And feel free to leave your comments below in the comment section. Any questions you may have, you can leave those there. I'm also available on LinkedIn through the DMs, and feel free to like the video and subscribe to the channel. The markets will be closed on Monday because of the Martin Luther King's Day in the United States, also because of the inauguration day of President-elect Donald Trump. So we will be doing another video. We'll be recording another video on Tuesday, the first day of the week when the markets will be open. And I'll see you there.